Kitco News special coverage of Paris Blockchain Week Summit is brought to you by Okra, permissioned DeFi composable index and strategy execution platform.
We're talking about crypto investment strategies with a fund manager with $500 million of assets under management. Viktor Fischer is managing partner of Rockaway Blockchain Fund. Welcome to the show, Viktor.
Thank you so much. Thank you.
Viktor, we're talking offline about the fastest growing protocols in terms of investment potential. Give us a synopsis of the sectors in crypto you like right now and why you like them.
So we are still looking a lot at infrastructure play. So we believe the world is multi-chain. So we are looking a lot at bridges, for example. We recently invested into Axelar, which is a bridge not only for assets, but also for messaging. Then we are looking at the whole, basically, tech stack, how to decentralize it. Permissionless oracles, for example. That's number one. Number two, DeFi. We still think there is a lot of improvements to be done on DeFi, for example, insurance. And number three, I would say, is the broader Web3. But we don't like to call it, DAOs or NFTs, but more creator economy.
Okay. Now you have 30% of your fund is tied to other funds. So I guess 30% of your company is fund of funds. Yeah. 70% is direct investments. So let's talk about the direct investments, and particularly the protocols. What are some of the biggest holdings you have right now?
Solana, we invested in March 2018 in the seed round when we met Anatoly and Raj at the 500 Startups incubator in San Francisco. And then we increased our position. So Solana is still our largest shareholding. And the second one, I would say, is Terra.
Okay. Why Solana? Why not Ethereum?
Well, our investors can buy Ethereum themselves. Why should we charge 220 fees on Ethereum? Yeah. But we had a lot of discussion internally, and we cannot focus on every ecosystem or every blockchain or every operating system. So we support Ethereum, Solana, and wider Cosmos, meaning like Tendermint and consensus algorithm, Terra, Osmosis, and others.
So what do you like about Solana then, from an investor standpoint?
Well, number one is still the team. So we are helping them a lot as well. For example, 2 weeks ago, we organized the Solana Hacker House in Prague. Yeah. We booked a train from Berlin to Prague, put on developers, bought a dedicated internet on the train. Yeah. It's a 4-hour train ride. Right. And also, we like the team's focus on just number one feature, and its speed. Yeah. We like the focus.
Do you have a price outlook on Solana, at which point, let's say it hits a target price, you would exit, or is that not your strategy?
We are long-term holders. We hold our positions on average 5 years. We have a typical VC fund which has a 10 plus 1 plus 1, so up to 12-year duration. Yeah. And ideally, I would like to never exit our positions because really? Our investments are like our babies, yeah? So
you don't have like a reweighting or rebalancing rule?
No, we don't have a rebalancing rule.
Okay, interesting. Yeah. I'm curious, this is a very interesting strategy. Most crypto investors are more short-term. Not even 1 year. I'm talking about 1 month or less. Yeah. Some people trade. I was talking to a lot of people now. The biggest sector of investors are still retail investors who are, day traders, short-term holders, and whatnot. Why did you decide on a buy and hold strategy for some of the most volatile assets in the world?
Because we were around in 2017, and also when the market crashed in 2018, and all the short-term funds actually suffered because their investors started to redeem their positions and their investments. And we believe in this technology long term, so we have chosen a very traditional VC fund structure where our investors are locked for 10 years.
All your investments are, well, I guess Solana anybody can buy, but what about the private investments that you've made? Can you comment on some of the projects or companies that you hold?
Well, we bought Solana when it was still private. We invested via a SAFT, Simple Agreement for Future Tokens, back in March 2018. Yeah. So it just then became public and became traded and became unlocked in January 2021, actually last year. But we have, in our direct investments, we have 31 positions, companies like Agoric. It's a layer 1 blockchain which allows you to program in JavaScript, object-oriented, so it opens basically smart contract development to 20 million JavaScript programmers. We have Wintermute, it's a market maker from London. We have Bitcoin Swiss, one of the largest exchanges. We have many DeFi positions like Vega Protocol. We have also marketplaces like Rarible. Large portfolio.
You mentioned in 2017, you survived the 2018 crash. Are you seeing any signs of this kind of crash happening again? I'm not talking about the correction we've seen since November, right? Because let's say Bitcoin was $60,000 last April. We're at $40,000 now. Yeah, we're down about 40% or so. But an 80% correction, which is what we've seen in previous cycles, can that happen again?
Well, I don't care about the price. I try to, feel whether we are in a bull or a bear market when I visit the conferences. And I was in Miami last week.
Yes, so was I, yeah.
30,000 people at the BTC 2022. Solana Hacker House was packed, 1,500 registrations, and they had to cap it. Look here, like Paris Blockchain Week, 3,700 visitors. Back in 2019, when they did the last edition, I spoke to organizers that had 1,700 people. So it's roughly 3x that. And many developers. So I don't care about the price volatility, but there are many builders in this space.
So you don't think that, well, what happened in 2017 exactly? Why did the market correct? You mentioned that obviously now there's a lot more interest in this sector that might support the prices some more. I'm just wondering whether or not some of the macroeconomic factors that may have caused a crash then are still around now, or maybe it's just a cycle that happens every couple of years.
Of course, there is a price cycle, but what will hold the price right now is the fundamentals. We have trading volume, which still holds at around 700 billion per month. The peak was in May last year at 2.4 trillion, so it still holds. It's much larger than before in the last cycle. Plus, we have 300 million people who now have crypto wallets. We have 140 billion locked in DeFi and still growing. And we have 4 million NFT holders just on Ethereum, another 3.7 on Solana. So this traction actually is what is important for us. It's not the price volatility.
One of the questions I get asked the most by people I visit at these conferences is, yes, there's a lot of interest, big attendance at all these conferences, but that's interesting because why hasn't the price moved up since November, where last year? You would expect more interest, more attendance, more adoption to push the price up to new all-time highs beyond what we saw last year in April, right? Why hasn't that happened yet?
Because I think we are in a complete new paradigm in terms of macroeconomic situation and geopolitical situation, especially here, I'm from Slovakia, we have a border with Ukraine, and we see, all those people coming in, and it just creates uncertainty. And uncertainty means there is a volatility in the stock market. When there is volatility in the stock market, the hedge funds get margin calls, they have to get liquidity, and they get it also from crypto markets. So that's why we are hit by the correlation with the stock market, which is due to the uncertainty of the current situation.
I know you don't give price targets because that's not what you do. You're a long-term holder, but let's just talk about the biggest coin, Bitcoin. People think it's a primer for the entire crypto space. Where can Bitcoin go realistically in the next few years?
Again, not investment advice. We don't hold Bitcoin. But I would say Bitcoin is a digital gold, store of value. And as a result, it will grow 15 to 20% per annum on average for long-term holders. So I would say after the next halving in 2024, I think should reach around 100,000 around that. That's actually my target. And then we'll see.
Okay. You are a VC in a very new sector. This whole asset class, the crypto asset class, has only been around maximum 12, 13 years, okay? It's probably very difficult to convince investors to invest in your fund in a completely untested space, is it not?
Yeah. We struggled.
But you still 500 million AUM, how did you do it?
Man, we struggled so much.
Of course you did.
And we also fundraise in Europe. So we are investors in American VCs like Multicoin or Pantera, and they do fantastic investor summits and great education. We are not so good in educating investors in Europe. I think we have to improve. So it was just a lot of groundwork and fundraising using demos. And we actually had to change our positioning a bit. And whenever we mentioned Bitcoin in a fundraising meeting, the meeting was over. What the positioning that we had to use was that blockchain actually automates financial services. And we still struggled to fundraise for around 2 years. Our first close was $6.5 million. I thought we would not survive because 2% management fee on a $6.5 million fundraise is like, I don't know, it's like 120K like per year. Like who can survive with that? Like how do you build a team? Today we have a team of 22, but it actually took us 1.5 years to fundraise that, because when Bitcoin hit 60,000 in April 2021, like you say, our phones just kept ringing. And investors called us with the mindset, we missed the Bitcoin thing, what is next? You have it maybe in your portfolio, so let's invest.
The fund started in 2018, correct?
Yes.
Back then, the price was relatively flat, much less interest then than now. Tell us about some of the rejections you got from investors who were not interested. Why were they not interested back then? Of course, if they had invested back then, they'd be making money today, but why were they not interested back then?
They never understood the value proposition. They thought it was an unregulated asset and its only value proposition was speculation. And we try to show them that with DeFi, through protocols like Compound existed back then, or MakerDAO, you could actually automate financial services, and that's what really helped us to fundraise.
It was more of a technology play than it is a speculative play.
Yes, it was the fact that blockchain could automate and digitalize financial services, but in traditional financial world is only digitized at 30%.
Do you think that's because, let me rephrase that question. Do you think that is the reason why Bitcoin, for example, trades very closely with the NASDAQ? Because most investors today that are in the space view cryptos as a technology play.
I think Bitcoin trades in correlation with the stocks because we are in an uncertain world, and when hedge funds get margin calls on the stock market, they need to get liquidity, and they also get it from Bitcoin. So that's why there is a high correlation. But there is not a high correlation with, for example, NFTs, because the type of investors are completely different.
So you think the fundamental value proposition of cryptos and the NASDAQ are different?
Yes.
Well, the way you described it, automation of financial processes, it sounds like technological development. It sounds like a fintech space. Am I wrong?
Yeah, I think it's a fintech space. So currently is basically DeFi helps you to borrow land or send money through stablecoins very easily across borders. Right. Open to everyone. We think the NFTs and DAOs is basically the creator economy on top of the internet. So you're an artist and you can basically issue NFTs or tokens to fundraise. And you can social token to have interaction with your fans. But it's again a financial layer.
What is your opinion on staking?
We are big stakers. So in order to add value to our portfolio companies, we actually buy hardware and put it in dedicated data centers, because then in Prague, in the Czech Republic, and then the network is even more decentralized. Right. So we are staking everything we can. Terra, Solana, Agoric, Terra. Also staking helps us to due diligence the technology, because we actually install the client, we see how technology works. We also communicate on a Discord with other validators, so we see how the community works. So it's a part of our due diligence process, but it also ends up adding value to the protocols.
And what kind of yield do you generate on the stakes?
Solana is around 6%, Terra is around 8%, Agoric is around 11%.
What are the risks to staking? People have always asked me that all the time. There must be a risk associated with the yield.
Well, of course there are slashing risks. If our servers are down, then we will get slashed on the stake that we manage, like for ourselves or our investors. Yes. But that's why we have redundant 2 data centers, redundant computers, to make sure like this doesn't happen.
Okay. Perfect. Viktor, I appreciate your thoughts on the crypto markets and for sharing insights on your fund. Best of luck.
Thank you so much. You too. Enjoy Paris.
Thank you very much. And thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of Paris Blockchain Week Summit is brought to you by Okra, permissioned DeFi composable index and strategy execution platform.